I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Sonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
One question I have to the point you're making here on where the risk appetite stands around Bitcoin versus other asset classes, there has been a serious dip in markets, Cathie. If you had to choose where you would buy the dip the most, would it be in Bitcoin, Tesla, or Nvidia?
Oh, my goodness. Well, we post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period.
So what does this mean in terms of where you see things going? Do you see more of a sell-off before things get better in these risk assets, Bitcoin or otherwise? How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down. And we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this